Welcome to Knowledge Transfer YouTube channel. A hearty thanks to everyone who has already subscribed to our Knowledge Transfer YouTube channel. For viewers who has not subscribed yet, please subscribe to our channel and press the bell icon nearby so that you don't miss any of the knowledge we transfer.
What is this video about? In this video, we are going to get some basic knowledge on filing income tax returns. What is income tax returns filing? Why do we need to file it? Some basic knowledge on terms like financial year, assessment year, etc. Why do we need to submit documents or organization? Why should we file income tax returns even after submitting documents to our organization? We tried to find answers to these questions and get some basic idea on income tax returns filing. What is income tax returns filing? Income tax returns filing is showing our income related information to government so that the money we hold is legal or white money. The method we use to show the earnings and expenses from our income sources is called income tax returns filing.
When showing our income related information to government, if our income exceeds a particular amount, a part of that amount should be paid as income tax to our government. Now we shall see the calculation of tax amount to be paid for the income limit we exceed. If an individual's total income per annum is less than 2.5 lakhs, he need not pay any tax amount to the government. Suppose if an individual's total income per annum is more than 2.5 lakhs but less than 5 lakhs, he has to pay 5% tax for the amount that he exceeds 2.5 lakhs. For example, if the individual's total income is 4 lakhs per annum, he has to pay 5% tax for the 1.5 lakhs. Suppose if an individual's total income per annum is more than 5 lakhs but less than 10 lakhs, the individual need not pay any tax for the first 2.5 lakhs. He has to pay 5% tax for the amount between 2.5 lakhs and 5 lakhs, which is 5% tax for the 2.5 lakhs, then 20% tax for the amount that he exceeds 5 lakhs. For example, if the individual's total income is 8 lakhs, he has to pay no tax for the first 2.5 lakhs, 5% tax amount for 2.5 lakhs and 20% tax for 3 lakhs, which is the amount he exceeds 5 lakhs and between 5 lakhs and 8 lakhs. If an individual's total income per annum is more than 10 lakhs, the individual need not pay any tax for the first 2.5 lakhs, 5% tax for the amount between 2.5 lakhs and 5 lakhs, 20% tax for the amount between 5 lakhs to 10 lakhs, and 30% tax for the amount that he exceeds 10 lakhs. For example, if an individual earns 13 lakhs per annum as his total income, he need not pay any tax for the first 2.5 lakhs, 5% tax for 2.5 lakhs, plus 20% tax for 5 lakhs and 30% tax for 3 lakhs. I know this is a bit confusing. Let's see this with some examples. An individual having a total taxable income of 4 lakhs will pay a tax of rupees 7,500. According to the tax slab calculation, there is no tax for first 2.5 lakhs and the tax up to 5 lakhs is 5%. So in 4 lakhs, we calculate 0% tax for the first 2.5 lakhs and 5% tax for the amount he exceeds 2.5 lakhs. So 5% tax for 1.5 lakhs. So the taxable amount to be calculated as 2.5 lakhs into 0 plus 1.5 lakh into 5 by 100, which is 7,500 rupees. Let us see one more example with high taxable income. An individual having total taxable income of 12 lakh will pay a tax of 1,72,500 rupees. According to tax slab calculation, there is no tax for first 2.5 lakhs and from 2.5 lakhs to 5 lakhs, the tax percentage is 5%, and from 5 lakhs to 10 lakhs, the tax percentage is 20%, and then above 10 lakhs, the tax percentage is 30%. So in 12 lakhs, we calculate 0% tax for first 2.5 lakhs, 5% tax for 2.5 lakhs, which is the amount between 2.5 lakhs and 5 lakhs, 20% tax for 5 lakhs, which is the amount between 5 lakhs and 10 lakhs, and 30% tax for 2 lakhs, which is the amount between 10 lakh and 12 lakhs. So the tax to be paid is calculated as 2.5 lakhs into 0 by 100 plus 2.5 lakhs into 5 by 100 plus 5 lakhs into 20 by 100 plus 2 lakhs into 30 by 100, which sums up to 1,72,500 rupees. Let us know these two terms before getting into detail: financial year and assessment year. What is financial year? A financial year is a year which we earn an income. A financial year always starts on April 1 and ends on 31st March. What is assessment year? The assessment year is the year that comes immediately after the financial year. This is the time in which the income we earn in the financial year is assessed and the tax is calculated. Both financial year and assessment year starts on April 1st and ends on 31st March. For example, for the financial year 2019 to 2020, the assessment year is 2020 to 21. They both are one and the same. Why did we submit documents to our organization for income tax? Many organizations ask for documents like HRA, life insurance, etc. during financial year to reduce the tax we pay. This obviously raises a question: why should we submit the documents to my organization when I separately file income tax returns in my assessment year? This is because when we submit documents to our organization, the tax deduction is calculated before submitting it to the income tax department and we need not pay tax for it. In simple words, we get our tax returns a step ahead. Let us see this with an example.
Let us assume an individual is salaried and his annual income is 7 lakhs per annum. He has an house rent allowance of 50,000. House rent allowance is the allowance given from the government that if the individual comes from a rented house, he need not pay any tax for a particular amount that he is eligible. Now, the total taxable income is 6 lakhs 50,000 and the tax he has to pay is 42,500 rupees. This 42,500 is deducted from his salary by his organization as TDS. In case if he did not submit documents for house rent allowance, the organization does not know that the individual comes from a rented house or own house and the individual is eligible for the allowance or not. So they calculate total income as taxable income. So in this case, the total taxable income is 7 lakhs and the tax amount calculated for 7 lakhs is 52,500. Now, this 52,500 is deducted from his salary by the organization as TDS. This is why we submit documents to the organization to reduce the TDS. Okay, now what should we do if we missed submitting documents to the organization? That's where income tax returns filing comes into play. All we need to do is submit our tax deduction documents directly to the income tax department and get our deducted tax refunded to the bank account. We get another question in our mind now. Why should I file income tax returns when I submit all my tax reduction documents to the organization? To answer this, 1. You may have income from other sources which is taxable. If you need to keep this income from the other sources as white money or legal money, we need to show this income to the government and pay tax for it. Income tax returns filing acts as a platform to make it happen. Second one, not all tax deduction documents are accepted by our organization. Only few are accepted by the organization and we have some more tax deduction documents which can be submitted directly to the government. Third one, if we file the income tax returns regularly, we get an identity of genuine citizen and this advantage will be very helpful in many scenarios, particularly when we approach the government. For example, when we approach the government for a bank loan, this identity will be very helpful. Fine. Where do I file my income tax returns? Everything is online now and you can file your income tax returns on government's official website. I have given the link for government's official website in my description. Now, how do I file my income tax returns? I will make a separate detailed video on it to explain it clearly. If you like this video, kindly support us by sharing and subscribing Knowledge Transfer YouTube channel. Thank you.